Hi, my Bitcoin followers! Want full explanation of Bitcoin mining? Stick around because we are here to explain the whole process easiest way possible. So, in today's video, we are going to be explaining Bitcoin mining. Without further ado, let's begin. Bitcoin is cryptocurrency that's gained wide popularity due to its rising price and is created through a process known as mining. Bitcoin mining is how new Bitcoins get introduced into circulation. Bitcoin mining is the process of creating new Bitcoins by solving extremely complicated math problems that verify transactions in the currency. When the Bitcoin is successfully mined, the miner receives a predetermined amount of Bitcoin. As prices of cryptocurrency and Bitcoin in particular have skyrocketed in recent years, it's understandable that interest in mining has picked up as well. But for most people, the prospects of Bitcoin mining are not good due to its complex nature and high costs. Here are the basics on how Bitcoin mining works and some key risks to be aware of. Bitcoin is one of the most popular types of cryptocurrencies, which are digital mediums of exchange that exist solely online. Bitcoin runs on a decentralized computer network or distribution ledger that tracks transactions in the cryptocurrency. When computers on the network verify the processed transactions, new Bitcoins are created or mined. These networked computers, or miners, process the transaction in exchange for payment in Bitcoin. Bitcoin is powered by blockchain, which is the technology that powers many cryptocurrencies. A blockchain is a decentralized ledger of all transactions across the network. Groups of approved transactions together form a block and are joined to create a chain. Think of it as a long public record that functions almost like a long-running receipt. Bitcoin mining is the process of adding a block to the chain. The result of Bitcoin mining is twofold. First, when computers solve the complex math problems on the Bitcoin network, they produce new Bitcoins, not unlike when a mining operation extracts gold from the ground. And second, by solving computational math problems, Bitcoin miners make the Bitcoin payment network trustworthy and secure by verifying its transaction information. When someone sends Bitcoin anywhere, it's called a transaction. Transactions made in store or online are documented by banks, point-of-sale systems, and physical receipts. Bitcoin miners achieve the same thing by clumping transactions together in blocks and adding them to a public record called the blockchain. Nodes then maintain records of those blocks so that they can be verified into the future. When Bitcoin miners add a new block of transactions to the blockchain, part of their job is to make sure that those transactions are accurate. In particular, Bitcoin miners make sure that Bitcoin is not duplicated, a unique quirk of digital currencies called double spending. With printed currencies, counterfeiting is always an issue, but generally, when you spend $20 at a store, that bill is in the clerk's hands. With digital currency, however, it's a different story. Digital information can be reproduced relatively easily, so with Bitcoin and other digital currencies, there is a risk that a spender can make a copy of their Bitcoin and send it to another party while still holding on to the original. If you're enjoying the video, then make sure to hit the like button and subscribe to the channel for more interesting videos about Bitcoin. With as many as 300,000 purchases and sales occurring in a single day, verifying each of those transactions can be a great deal of work for miners. As compensation for their efforts, miners are awarded Bitcoin whenever they add a new block of transactions to the blockchain. The amount of new Bitcoin released with each mined block is called the block reward. The block reward is halved every 210,000 blocks, or roughly every 4 years. In 2009, it was 50. In 2013, it was 25. In 2018, it was 12.5. And in May of 2020, it was halved to 6.25. This system will continue until around 2140. At that point, miners will be rewarded with fees for processing transactions that network users will pay. These fees ensure that miners still have the incentive to mine and keep the network going. The idea is that competition for these fees will cause them to remain low after halving is finished. In order to successfully add a block, Bitcoin miners compete to solve extremely complex math problems that require the use of expensive computers and enormous amounts of electricity. The computer hardware required is known as Application-Specific Integrated Circuits, or ASICs, and can cost up to $10,000. ASICs consume huge amounts of electricity, which has drawn criticism from environmental groups and limits the profitability of miners. If a miner is able to successfully add a block to the blockchain, they will receive 6.25 Bitcoins as a reward. The reward amount is cut in half roughly every 4 years, or every 210,000 blocks. As of August 2021, Bitcoin traded for around $48,000, making 6.25 Bitcoins worth around $300,000. But the price of Bitcoin has been highly volatile, which makes it difficult or impossible for miners to know what their payment might be worth whenever they receive it. Even if Bitcoin miners are successful, it's not clear that their efforts will end up being profitable due to the huge upfront costs of equipment and ongoing electricity costs. The electricity for one ASIC can use the same amount of electricity as 500,000 PlayStation 3 devices, according to a 2019 report from Congressional Research Service. One way to share some of the high cost of mining is by joining a mining pool. Pools allow miners to share resources and add more capability, but shared resources means shared rewards, so the potential payout is less than when working through a pool. Bitcoin's price has varied widely since it was introduced in 2009. In just the past year, Bitcoin has traded for less than $10,000 and nearly $65,000. This kind of volatility makes it difficult for miners to know if their rewards will outweigh the high cost of mining. Very few governments have embraced cryptocurrencies such as Bitcoin, and many more are likely to view them skeptically because the currencies operate outside government control. There is always the risk that the government could outlaw the mining of Bitcoin or cryptocurrencies altogether, as China did earlier this year, citing financial risks and increased speculative trading. It's important to remember the impact that taxes can have on Bitcoin mining. The IRS has been looking to crack down on owners and traders of cryptocurrencies as the asset prices have ballooned in recent years. Here are the key tax considerations to keep in mind for Bitcoin mining. If Bitcoin mining is your business, you may be able to deduct expenses you incur for tax purposes. Revenue would be the value of the Bitcoin you earn, but if mining is a hobby for you, it's not like you'll be able to deduct expenses. If you're successfully able to mine Bitcoin or other cryptocurrencies, the fair market value of the cryptocurrency at the time of receipt will be taxed at ordinary income rates. If you sell Bitcoins at a price above where you received them, that qualifies as capital gain, which would be taxed in the same way it would for traditional assets such as stocks and bonds. While Bitcoin mining sounds appealing, the reality is that it's difficult and expensive to actually do profitably. The extreme volatility of Bitcoin's price adds more uncertainty to the equation. Keep in mind that Bitcoin itself is a speculative asset with no intrinsic value, which means it won't produce anything for its owner and isn't pegged to something like gold. Your return is based on selling it to someone else for a higher price, and that price may not be high enough for you to turn a profit. So guys, let me know down in the comments section below. Do you have any questions about the whole process? For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.